Good afternoon, all of you. The topic is very interesting. Is the new age financing options for the MSMEs. I think before we actually come to the presentation part, I think what's really changed in India in the last 7-8 years is the rapid growth. We've all been growing at the 8 to 9% kind of growth rate, and MSMEs are nothing but either an upstream or a downstream of a main industry segment. So it's quite natural that as the industry is growing, as the overall economy is growing, the contribution of SMEs is going to get stronger and stronger. And there's a clear correlation. We are growing at 8%, and as Mr. Many was quoting, the SMEs is going at 12%. So as the main industry is growing, obviously the outsourcing, the linkages will improve, and certainly there will be a more dependence and more productivity coming out of the MSMEs. So I think before we come to the changing aspects, the product solution, I think what is important to understand is what is changing needs of SMEs. Why the needs are changing. Now I've been a part of SME finance for the last few years, and I think what I've really come to one conclusion is today the MSMEs or the SMEs are far more globally competitive. The solutions they are offering is far better than just fulfillment. So there's a lot of value addition which has started happening at the MSME ends. So when that happens, I think it's not just only about the working capital, which would traditionally be the area of focus. When you're talking of value addition, we're talking of working capital as well as capex needs. So I think the entire landscape of the MSMEs is changing. So I think this has been touched upon several times. We have absolutely no doubt about what kind of contribution MSMEs are doing, and this is only going to get better. If you look at the reports of the various industry bodies, I think there's a very, very positive outlook how the MSME sector will continue to prosper. I think what's changing, our opinion is that there is a focus away from a core asset product, typically which was, let's say, cash credit or any other part of working capital finance. I think the movement is there from other non-core financial products. There is venture capitalism, there is private equity, there is debt structuring, there are fiduciary services, there is supply chain financing, there is pre-shipment, post-shipment. So I think the entire 360-degree of the product, the asset bouquet or the loan bouquet towards the SMEs will change. So that's one thing which we definitely regard as very, very crucial. And the other thing, as Mr. Many was pointing out, was that there is more than finance element to what an SME may want to do right now. So there could be other elements such as business consulting, there could be HR consulting, there could be things like expanding geographies, improving the marketing networks. These are all elements which will come into play. And as the presentation which was made by Jasjit earlier was fairly, I think it was very, very surprising in terms of statistics, not just only in terms of websites, even the usage of B2B platforms. I think today, I would like to echo the same point, that there is a very huge need for all the MSMEs to get very active on the digital space. A lot of prospecting can happen through that. So I think a lot of things are changing. And as I mentioned, there is a huge set of products like core asset products, liabilities, transaction services, wealth management, private equity, debt structuring, supply chain financing, and so on. What you see on the right-hand side top quadrant is the availability of services. I think the traditional asset products, liability products, and wealth management products are something which are very highly available. What's not really available is the new set of products that we've been talking about. So I think as an industry, there's a huge need to move this entire gamut into the top quadrant. Where there's a demand of products, the needs have to follow there. So the entire circle that we see has to move into the right quadrant. And that's one of the core needs of the SMEs at the moment. And this is, I think, very critical from the service delivery perspective. Like Mr. Many also touched upon this point, that there has to be a very clear demarcation between the bottom of the pyramid and top of the pyramid. So when we define the MSME sector, most banks and most financial institutions, not just in India, in fact worldwide, are following a particular trend. So there is a mid and large corporate, there are medium enterprises, there are small enterprises, and there are micro enterprises. And we all know the characteristics of each of this is very different. A micro institution may have inadequate access to finance. It could be at a startup phase. So the need here is very different. It's not cash credit. The need may be an unsecured working capital or the unsecured loan. And there are several schemes which are offered by development banks, by FISME, where we can actually offer the solution to the end user. For example, CGTSC scheme is exactly one of the schemes where you can actually give a loan up to 1 crore, which is totally unsecured. So the needs of micro, SME and medium sector is very different. So, and if you look at the products also, on the top of the pyramid, the products are very different. They are structured products, they are supply chain financing, there is project, infrastructure funding. And if you go down here, the product obviously becomes a lot more granular. So I think one key element which is required today from any banking perspective is to differentiate the four different tiers and have a right solution for all of them. There's the changing needs of the SMEs. I think the next segment obviously is the how do we actually wow the segment. What kind of solutions, what kind of methodologies can wow the segment. So the huge segment, starting from a micro segment going up to mid corporates. I think there are four, I just try to put four concepts around it, just to summarize where are the four areas which are required. I think the first area is the process part. The process in the sense that now it's happened in India that MSME or the SME has been started recognizing as a very separate vertical. The acquisition strategies are changing, the service technologies are changing. I think what's equally important to recognize is the product part. So there has to be bundling of products which can be done for different segments. It could be a mixture of core financial products and non-core financial products. Not just debt financing, also private equity or a private equity syndication, if not a direct private equity play. Plus there has to be a very strong and healthy mix of secured and unsecured funding. And unsecured funding could be in form of short-term working capital needs like channel finance, factoring, bill discounting. But there is a very strong need for clubbing the two. And accordingly, I think what needs to come out is the risk-reward pricing. So there's some changes required in the product side. And what's very, very important, I think, is also the industry focus. As the MSC bankers and the MSME are getting more into this area, I think there's a lot of need to understand the segment. When you understand an industry particularly better as a financer, you can support that through whole 9 yards. Plus, at the same time, then you can also move into certain surrogates, stroke industry margins. You will come to know, an industry operates at a particular margin. And the balance sheets and the financials of the SMEs are obviously getting more transparent and cleaner. But you would also know where the ball actually is, on which meter which level of the meter the ball is actually placed. And lastly, I think the most important thing for any MSME banking is relationship management. I think I've dealt with mid-corporates and I've dealt with SMEs, and I personally see no difference. There has to be an equal amount of relationship focus, which has to go into an SME, which has to go to a corporate. In fact, SME needs more relationship selling because he's handling production, he's handling finance, and he's handling the marketing. So I think the relationship element is something which is very, 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 very critical to provide right service to segments. This is what is taken from the IFC side. Now, this is something what is evolving worldwide and even in India. And this, to a great extent, also addresses the point which Mr. Mani had raised that, the small businesses have to be differentiated from the large businesses. So the emerging trend globally is that bankers have made different models. There are 4 different models. One model is where the SME fits under the commercial banking. The second model is whereas it comes under retail, so there is a separate focus on small business. The third model is that there is a separate vertical for SME, the model 3. And the last is the split model, which is the latest trend. The small businesses are catered to retail segment and medium to large are catered to a commercial banking setup. But this point, the reason for putting this slide is that the bankers and the financiers are now recognizing the needs, changing needs of SMEs, and there is a different way of addressing a small, a medium, and a larger SME. And this is, I think, what I feel is the requirement. There has to be a segregation of products based on needs. As the needs are changing, today the SMEs, as I discussed, is not only about working capital requirement. It's about producing better products. It's about giving better services. It's also about adding capacity, because India is growing at a very fast rate. So there is definitely a different set of needs which is there. There is a short-term need for working capital. That could be addressed in form of channel finance, pre-shipment finance, post-shipment finance. There could be medium-term and there could be long-term needs like loan against property, asset financing, project finance. So I think the sharper focus each financer has on all these 3 elements, these 3 products, is I think will make them more competitive to serve the SMEs better. So I think this is the second segment. Okay, the one element point which goes out is the relationship. I think the most MSME bankers have to move, or will have to gradually move to a single point contact model. So there has to be a single point of contact for servicing and sourcing. Typically what happens in certain places is there's a separate acquisition team and the service team is either through a branch or through an IVR. I think that has to change. The service needs of SMEs are very different. So there has to be a single point of contact is something which is very critical. I think this covered two segments. One was about the changing needs of SMEs, and second is the emerging trends of what different bankers in India or globally are adopting to serve this market. And last segment, I will just briefly touch upon what Aditya Birla does, and I'm calling it the Aditya Birla Finance Way. We are a part of Aditya Birla Financial Services Group. Aditya Birla Financial Services Group hosts about 7 companies, which include Birla Sun Life Insurance, AMC, private equity, broking, distribution, and a finance business. We are one of the largest groups in India, we are aware. And we have two main businesses. One is the corporate finance, which takes care of the SMEs and the mid-corporate. And second is the capital markets group, which does the security-based lending and the promoter funding or a loan against shares kind of product. I think the model that we believe, which is healthy for the SMEs, is that as the business grows, on the left-hand side, you'll see the current working capital requirement. As the business grows, obviously there is a need for increased working capital requirement. And the belief is for the increased working capital requirement, all the time you do not have a secured collateral available. So your increased working capital demand has to be met with a combination of secured and unsecured working capital requirement. And this is the kind of methodology we follow while designing our products. So we have secured products, we have unsecured products like channel finance, we do bill discounting. So we try to meet your additional working capital demand, not just through collateral, but through a combination basis. This is a summary of philosophically what are the success factors required for servicing the segment. I think credit limit, whether it is through only secured or a combination of secured and unsecured, is very, very critical. What a customer needs is a wide product offering, advisory services, is faster tax, better service, and competitive interest rate. I think these are the 5 factors that we follow while servicing and designing our products. In a nutshell, the product bouquet, as I put in perspective, is that we have solutions for the enterprise, we have solutions for the entrepreneur. Because we don't think entrepreneur and enterprise is too different from each other. So there are certain solutions like short-term solutions, as I discussed, which is vendor finance, channel finance, LC discounting. There are medium-term products like a term loan, a promoter funding, or a piece syndication. Aditya Birla Private Equity, we have a separate company which is about a 850 crore private equity fund. So some of our customers which are right for private equity investment, we can refer to the private equity arm. So what we are trying to create is a bouquet of short-term and medium-term services, which not just caters to the enterprise, but it also caters to the personal needs, which could be loan against shares, financial planning, all those kind of things. So that's the model we're trying to follow, by giving enterprise plus entrepreneur-based solution on a short-term, medium-term, and a long-term basis. And these are the modalities of channel finance. We all are aware how it works. I'll skip this one. And then there's vendor financing solutions, which is the bill discounting typically. This is a summary of our offerings. We have channel finance, vendor finance, LCBD, promoter funding, loan against shares, life insurance, general insurance, mutual funds, broking, private placement of equity. We have a fair range of products, and apart from the product, I think we have a philosophy behind servicing the MSMEs more than just the product. Thank you so much. And in case you have any queries, I have the colleague Mohit in Delhi. His number is here. You can contact him if it's required. Thank you so much.